It's vital that the U.S. asserts leadership as it has in the previous technological innovations. This is at the heart of why the U.S. recently rolled out the Digital Dollar Project. Now, this is a plan for the study, testing, and rolling out of a CBDC. What's a CBDC? Why has the U.S. been snail-paced in adopting the technology? Why the sudden change of heart? What are the pros and cons of a digital dollar being introduced to an already successful economy? For this and more, stay tuned.
I want that, I need that, that's real homie, I can't believe that.
The U.S. Federal Reserve is moving forward in its effort to develop its own digital currency. It announced it will release a research paper this summer that explores the move further. Though the central bank did not set any specific plans on the currency, it's clear that the Fed has been carefully monitoring and adapting to those innovations.
Today we are in the midst of a technological revolution that is fundamentally changing our world.
The U.S. nonprofit Digital Dollar Project said it will launch 5 pilot programs over the next 12 months to test the potential uses of a U.S. central bank digital currency.
We launched the Digital Dollar Project in January of 2020, 16 months ago, and our mission really was to advocate for the advance of U.S. exploration of this new technology in the form of central bank digital currency.
A central bank digital currency, CBDCs, are the digital equivalents of banknotes and coins, giving holders a direct digital claim on the central bank and allowing them to make instant electronic payments.
A CBDC is a new type of central bank liability issued in digital form.
If you're already transacting in cryptocurrencies, you have a better chance of understanding the concept. Central bank money traditionally takes two forms: cash and reserves held by eligible financial institutions at the central bank.
Most central bank money is held by commercial banks.
Central bank digital currencies, CBDCs, is a generic term for a third version of currency that could use an electronic record or a digital token to represent the digital form of a nation's currency.
You might have heard of Bitcoin or other digital money that is supposed to disrupt finance. But digital currency issued by governments in this way might be even more radical.
Think of it as a stablecoin minted and issued by the central bank.
Coins tied to the value of the dollar or another currency, known as stablecoins, have emerged as a new way to make payments.
So while debit cards or payment apps are a form of digital cash, those transactions are created by commercial banks based on money central banks credit to those bank accounts. They're not fully government-backed and can take days to settle, and often incur fees. Cryptocurrencies, meanwhile, are controlled by private actors and the transactions are more direct.
Recently, the rise of distributed ledger technology, which offers a new approach to recording ownership of assets, has allowed for the creation of a range of new financial products and services, including cryptocurrencies.
Leveraging the blockchain, CBDC could be issued from the central bank directly to consumers rather than directly to banks.
Central bank digital currency, or CBDC, is a bit like digital cash, as it gives the consumer a direct relationship with the central bank. CBDCs are only being used or trialled in a handful of countries worldwide, but they're growing fast. 80% of central banks are considering issuing them in the future.
As a world leader, the US is inherently required to take the lead on innovations and technology.
We expect to play a leading role in developing international standards for CBDCs, engaging actively with central banks in other jurisdictions, as well as regulators and supervisors here in the United States throughout that process.
There's another reason yet as to why the Digital Dollar Project was rolled out.
We haven't had the dialogue and the experience from a U.S. context.
Although there was enough data on CBDC based on data from other countries, what there isn't is any real data and testing from the United States to inform that debate.
There's data coming out of Europe, there's data coming out of Canada, there's data coming to Singapore, and of course there's stories coming out of China. But what we really don't have is real U.S. testing and data generated from that in order to inform the conversation about a digital dollar.
Central banks around the world, including China and Europe, are revving up CBDC projects to fend off threats from cryptocurrencies and to improve payment systems.
6 years ago, China's central bank saw the upsides of developing their own digital yuan. As of April 2020, the program is being taken for a test run in 4 Chinese cities.
China is the most advanced in the CBDC area, so let us look at the digital yuan.
The digital yuan is tied to the value of the normal physical yuan. Since it's state-backed, that means the government is liable for it and it should be stable, compared to cryptocurrencies like Bitcoin, where the value can swing wildly.
So, according to the Digital Currency Research Institute of the People's Bank of China, lower transaction volumes at less than 5,000 yuan could be sent to a digital mobile phone number. But as higher volumes mark those transactions, users would have to link to bank accounts and verify their identities.
But if China's central bank develops and distributes the currency, then they can see exactly who is involved in every transaction.
Another major world currency is the pound, and Britain is already looking at developing the digital pound. So the Bank of England has stated in a discussion paper that a significant percentage of consumer deposits may in fact embrace digital currencies. The bank is studying what would happen with the issuance of a digital version of the pound. In one scenario, the digital currency would be issued directly to consumers rather than directly to the banks.
In theory, instead of keeping your money in a commercial bank, you could hold all your money in the Federal Reserve or the Bank of England.
So, very much at the elementary stages right now. As guardian of the world's most widely used cryptocurrency, the U.S. Federal Reserve is moving more cautiously to build a technology platform for hypothetical digital dollar. And the prevailing argument for why the U.S. has lagged behind on the front of token economy is that it is far more important to get a digital dollar right than it is to be fast. As China pushes ahead, the United States must drive a discussion on incorporating U.S. values such as privacy and freedom of commerce and speech into the development of CBDCs.
And what values are going to prevail? Are they going to be traditional values of individual privacy that have long been the norm in the West and in democracies? Or are they going to be the values of social credit scores and social surveillance?
What has forced the U.S. on its maiden exploration into CBDCs, knowing its apprehension with cryptocurrencies? First is the waning faith and confidence in Americans, not only in the dollar, but also in the payment networks, banks, and other payment service providers that allow money to flow on a daily basis.
The effective functioning of our economy requires that people have faith and confidence not only in the dollar, but also in the payment networks, banks, and other payment service providers that allow money to flow on a daily basis.
Second, the safety and efficiency of a blockchain-powered payment system.
As the Central Bank of the United States, the Federal Reserve is charged with promoting monetary and financial stability and the safety and efficiency of the payment system.
China's progress in the digital currency race has stirred worries that it could undermine the dollar's position as the global reserve currency.
China is one of the largest economies leading the way by trialing a digital yuan.
Fourth, the financial inclusion of the unbanked.
Supporters of CBDCs claim they could lead to a world where more people have access to financial services.
And fifth, to make it easier to disburse government aid. Is this the hill upon which the current banking system dies? Well, as it is being proposed, a digital dollar would exist alongside other forms of physical and electronic money, rather than replace them.
We think it is important that any potential CBDC would serve as a complement to, and not a replacement of, cash and current private sector digital forms of the dollar,
However, the banking societies have cautioned that the introduction of a CBDC could fundamentally change the role of the central bank in the United States and reshape the banking system.
But for central bankers, the problem is even more acute. They fear these developments could cut the cord between the central bank and the economy altogether.
However, private digital currencies do somewhat have a lifeline in this. First, they allow financial inclusion while increasing individual privacy, something even China with the digital yuan hasn't been able to do.
Digital currencies could also increase the potential for state intervention in everyday transactions.
Then the issue of privacy is so critically important, right? We're watching the rise of a digital yuan, and there's no question that that's going to be part of China's social surveillance and their social credit system.
China has a notorious history of being a surveillance state, and this could be another avenue to continue their monitoring methods.
Second, innovational freedoms. Digital currency offer an opportunity for a ground-up redesign of our payment systems. If built in the right way, a digital dollar might empower users and create a platform for innovation in payments. Do you think the US will successfully integrate the digital dollar into its already powerful economy? Would you approve if your government moved to tokenize your local currency? Do you think the cryptocurrency market will be crashed by CBDC? I'd like to know what you think. Let me know in the comments. I've been your host, Tweeps. The channel is Intrinsic Kenya. I was glad having you here with me. I hope to see you once more in the next one.
I want that.